Let me ask you a simple question. If your debit card stopped working tomorrow, if ATMs went dark, if the dollar did not disappear, but people stopped trusting it, what would you use to buy food? Because history says, and this isn't hypothetical, it's already happened multiple times. In places like Venezuela, where hyperinflation reached hundreds of thousands to millions of percent annually, and the currency effectively collapsed. And when that happens, people don't sit around debating CPI prints. They revert to real money, gold and silver. Let's define stuff hitting the fan realistically, not Hollywood apocalypse style, not zombies, but stuff hitting the fan is a currency crisis, a banking freeze, capital controls, rapid inflation or hyperinflation, supply chain disruption. That's it. That's Venezuela, that's Argentina, that's Weimar Germany. And in every one of those cases, something very predictable has happened and you can expect will happen. Fiat money loses trust, people move to alternatives, and trade doesn't stop, it adapts. Often too, in historical cases before, US dollars, barter, gold, and silver, because that, when money fails, people don't stop transacting, they just change what money is. Everyone talks about gold, but in a stuff hitting the fan scenario, silver is where things get interesting because gold has a problem. It's too valuable. If gold is $5,000 an ounce or $10,000 or $50,000 in a crisis, you're not shaving flakes off a coin to buy groceries, but silver solves that. It's got lower unit value, it's easier divisibility, more practical for daily transactions. Historically, silver has always been the circulating money, while gold has been the wealth storage. So if the system fractures, gold preserves wealth, but silver becomes money again. So now let's get tactical. Let's talk about 1 ounce silver rounds. These are 0.999 fine silver. They're privately minted. They're clean, they're simple, and they're uniform. And the pros, they're easy to stack, they're recognizable weight, and they're efficient storage. But the cons, no government backing, they may require testing and trust in trade, and they're harder to make change. So now let's talk about U.S. junk silver, the pre-1965 coins. We're talking dimes, quarters, and half dollars, 90% silver, and this is where things get real. So the pros, they have instant recognizability. Everybody knows what a quarter is. Small denominations, a dime is roughly 0.07 ounces of silver, and that's incredibly useful. They have built-in divisibility. You don't need to cut anything. And the trust factor in chaos, familiarity matters more than purity. So the bottom line, if stuff hits the fan, gold is your savings account, 1 ounce rounds are your mid-sized transactions, and your junk silver is your day-to-day currency. So if you had to choose one for survival trading, junk silver wins. And this is where people get it wrong. They imagine silver hits $1,000 plus an ounce, and that's not quite how it plays out. In hyperinflation, the currency collapses, prices explode, silver doesn't moon, it reprices. In Venezuela, the currency became effectively worthless, and the people shifted towards hard assets and foreign currency to transact. So how does silver work? Well, not like a stock. More like a farmer accepts a few dimes for eggs, a mechanic takes a few ounces for repairs, and a landlord prices rent in silver dollars. It becomes a parallel monetary system, not theoretical, but functional. So let's stay grounded. There are the real triggers. They are these. Monetary management, excess money printing, debt spiral, and loss of confidence. Exactly what drove the Venezuela collapse. So if the dollar ever loses global trust, that's game over for stability. And the banking system would then freeze. You'd see potential cyber attacks, a liquidity crisis, and bail-ins or withdrawal limits. You'd see supply shock, where there'd be energy crisis, there'd be war, there'd be trade breakdown. So stuff hitting the fan is rarely one thing. It's a stacking of all these failures. So this is where gold fits. Gold is not buying groceries. Gold is getting out of the system, preserving large amounts of wealth, moving across borders, and in hyperinflation scenarios, gold often becomes the anchor asset. Silver becomes the transaction layer. They're not competitors. They're a complementary system. And so what does silver actually price at? Here's the most important insight. It's hyperinflation. Prices become meaningless. You might see silver at billions in Venezuela bolivars per ounce or trillions, but that's irrelevant because what matters is purchasing power. Historically, precious metals retain purchasing power even as currency collapses. The currency just adds zeros. So instead of asking what will silver be priced at, ask what will it buy? In extreme scenarios, 1 ounce of silver is maybe a week of food. Several ounces is rent. Larger holdings is financial survival. So here's the uncomfortable truth. You don't prepare for stuff hitting the fan because it's likely tomorrow. You prepare because when it happens fast. And when it happens, the rules change overnight. Silver is not an investment in this context. It is a hedge against monetary failure, a tool for trade when systems break, and a bridge between collapse and whatever comes next. It's the tail risk hedge. Gold protects your wealth. Silver helps you live. And if history is any guide, when trust in money disappears, silver doesn't go up, it steps in. And now you know the rest of the story for silver once stuff hits the fan. In the meantime, build that stack. iBankerU. Good day.